Welcome back, investors, to Ticker Time News. I'm Adam, and today's trade shaped up to be mostly on the positive side, building on yesterday's gains. The upside bias was supported by a pullback in Treasury yields, a weakening dollar, and leadership from mega cap stocks like Tesla, for one example. The main indices hit an air pocket, though, right around the midday without any specific news catalyst causing that. But it did bring the S&P 500 and Dow Jones into negative territory briefly, and that was until, and I think a lead up until the FOMC minutes were dropped. But the positive disposition was not unusual for Thanksgiving week. So a seasonal bias was likely another supporting factor for stocks today. Other supportive factors today included positive response to earnings from Deere and Company, ticker symbol DE. We reported on them yesterday, talking about how this morning, when they reported earnings, it could be rather good. Their peers reported good earnings, and it was just a setup that was, let me put it up here on the screen real quick so you can see. It was a setup we talked about yesterday. We showed you where resistance was, and it hit it spot on. Wait for it to load. There it is. And here comes the highlighter. One more second. There it is. That's what we talked about yesterday. This rising wedge pattern here, or ascending triangle potentially set up here. I think it's more of a wedge, though. And boy, it just jumped right up. There's a wick way above it. It went all the way up to where we highlighted as resistance. It tagged it, and then it pulled back. But it was still up over 5% on the day. Well done, Deere and Company. Now, on Friday, I don't think there's going to be added gains to this one. This could pull back down and have some profit taking occur. Now, there was also renewed interest in stocks that had sold off today. Tesla is one of them. TSLA is the ticker symbol. Tesla was up over 7%, almost 8% on the day. It did receive an upgrade this morning to neutral from sell at Citibank. In addition to Tesla, there were some other mega cap names that were important directional drivers today. The Vanguard Mega Cap Growth ETF, ticker symbol MGK, it closed with a gain of 1.1%, but fell as low as the flatline mark for the day, midday, when everything just kind of fell. I think it was in preparation, again, for the FOMC meeting, but there was no other specific news or catalyst that did that. But this move did coincide, with the stock market taking that leg down, Treasury dollar catching a little break, but then they just completely pulled back once the FOMC minutes were released, and everything just popped here. But nice move by Tesla. It had gotten oversold. It reached, on day one of this week, it reached the lower end of its weekly expected move. Yesterday, it was up 1.2%, but really it just sat there at the lower weekly expected move. Now it has popped. We could see gains on Friday. I don't know how much we could see on Friday. It's going to be a very low volume day. Okay. Friday is going to be really low volume. Plus, the market closes early at 1 o'clock p.m. Eastern. Made some nasty gains today. That's good. To close out into Thanksgiving. Perfect. Let's throw that up here real quick. I sometimes forget to, I see the comment, I read the comment, and then I forget to put it up on the screen so everyone else can see it. Boy, this new software sure does make those comments stand out nice and bright on the screen. Made some nasty gains today with zero day puts. Cool. To close out the day into Thanksgiving. Wonderful. Good job. Good job. What did you do that on, if you don't mind me asking? Boom. Okay. Wonderful. Okay, so Tesla was another one. It helped tremendously. And going into Friday, okay, if Tesla continues, also, let's look at Alphabet. GOOGL. Oh, got to get my cursor back over here. GOOGL. If these mega cap stocks can pick up some momentum on Friday's trade, which again is going to be very low volume, then we could see this continue. As you can see, We pointed this out on Monday and on yesterday's episode that Google was flagging, okay? And it's breaking out of this flagging pattern after a huge run-up, flag, and now we're going to see potentially more gains. Now, the upper weekly expected move is sitting right at $100. And if we go back to Tuesday, November 15th, that was the high of this rally. That is sitting right at $100.14. So if Alphabet can make it above and break the structure there, have a break of structure, that would be seen as positive or bullish. If it just gets up and tags the $100 a share zone, that's okay. It doesn't mean bullish. It doesn't mean anything at that point. It's just a nice breakout and catch it and ride it. So this is one to watch for Friday. It did close above its 50-day moving average again today. Yesterday it closed below it, but it came right up to it and then stopped. So this is one to watch. Apple, AAPL. That's another one of the big mega caps to watch as well. Let this load here on the screen. SPY triple top. Awesome. Good job on that SPY. Okay, here's Apple. Apple is moving sideways, kind of like Alphabet. Let me get my highlighter here. But we kind of have, you can draw a pattern like this, and you can see that Apple is wedging after a big move up, right? It almost could look like a pennant, right? Let me show you this. Let me go to the chart patterns. First, let me clean this off. I didn't clean it off from the last time we used it. And I got that bullish pennant highlighted there. All right, so we got the bullish pennant right here. This could be a play for Apple where it popped and now price is consolidating. And then it could break out from that, right? You set your stop loss right below, and then you enter on the breakout and you ride it up to your target. Typically a 1 standard deviation move for that. So we've got that on Apple, which is a bullish pennant there. Let's take this back down. I like to show you guys that. Okay. Let's clean this chart up here real quick. Now, the other little form that it could be making, like I said, the symmetrical triangle. But we do have this 50-day. It's coming down like this. Yesterday, it tagged it, and it found support there, which was wonderful, which was really wonderful. So watch Apple, watch Alphabet, watch Tesla, all for further gains. I got a comment on Palo Alto Networks. If you haven't seen it yet, PANW is the ticker. I did put a standalone video out about Palo Alto Networks earnings. I think they could be set up for continued move sideways, quite frankly, or a move up, right? If we look at them, and like I said on that standalone video, for the past 6 months, they've really gone nowhere, right? If we go back here to the 8th of June, June 8th of this year, that's exactly where we topped out at today, okay? So we're practically at the same exact place we were back at the beginning of June here at the end of November. Now, I do think Palo Alto Networks, this red line right here, this is going to be stiff resistance. It was here, 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 across here, and here. So a lot of resistance there on this line. The only time on this line we had support was all the way back over here, all the way to the left of the screen. As it was falling, it did stop and find support there. And then we have support when it was falling off of this high right here. It came, it bounced, but that was just a short-term little bounce. So I think it's going to run into some sticky resistance here. However, that would be Friday. On Monday, if traders come back to the office and we've got, a full office, because right now the office emptied out pretty quickly today. If we have a full office, then maybe on Monday, we might be able to see a break above this, but I would be careful around the 180 mark, which is up just a little bit higher. It's at 173 now. If it breaks above 175, I think it could go to 180. All right. And there's prior resistance at that 180 mark as well. Now, that's Palo Alto Networks. Okay. And again, if you haven't watched that video, check it out. Just go to youtube.com/tickertime news, and it's underneath the watch list for stocks and earnings. Okay, so that's Palo Alto Networks. Now, let's see here. What else do we need to talk about today's? Oh, yes. We had some economic data come out today. Some reports like the October durable goods orders, the October new home sales, and the November University of Michigan Index of Consumer Sentiment, they came in and they were better than expected. But there were some others like the weekly initial claims and the preliminary November IHS market manufacturing and services PMI that were worse than expected. The Treasury market and the dollar seemed to key off on the IHS manufacturing and services data, which showed contraction readings. Remember yesterday we talked about the services PMI. It was a negative reading last time around. It was contracting. And we mentioned how manufacturing was really close to that contraction line, but it was still just barely over that growth line. Watch out for it to come off and start contracting. What do you know? It did. Manufacturing is now contracting in the U.S. And talking about that dollar, let's go look at it. Ticker DXY. It's down. It's at that 105.9 level right now. I don't count this dollar down and out until it breaks either that 200-day moving average or 105. Then I say maybe the dollar is done. Now, the dollar did have a pop, right? There was a bit of a flagging structure here, and then it broke down. Or you could call it a descending triangle. It did break from that, but the very next day and today as well, it has broken down from that. But where it is sitting at right now is at Wednesday, November 16th, that low. So 1 week ago, it's at that low. Could it hold as support and bounce? Well, if it bounces tomorrow, that means the market's going to be red. So where's the dollar going from here? Lower to try to tag the 105 even area, the 200-day moving average. If the dollar gets more pressure on it, that would be good for equities because there's an inverse correlation between the two. Okay, let's keep moving on. Now, there was one more thing about the economic data today. There was an uptick in initial claims, all right? And because of that and the contraction now in both manufacturing and services PMI, there could be a reason to think that the Fed might not overly be aggressive with its future rate hikes. And on the same note as that, the FOMC minutes from the November 1 through 2 meeting, it seems to support that thought as well. The minutes reveal that a substantial majority of participants judged that a slowing in the pace of rate hikes would likely soon be appropriate. So we've got December, okay? We could get a 50 basis point rate hike in December. And then I believe the meeting is on February the 1st. That's the first meeting of 2023. They could do a 50 basis point rate hike at that meeting, or that could be the meeting where they stop raising rates and they hold it. But CPI data, further data on employment is going to be important. As the Fed has already said, they're going to use data to drive their decisions. So the view that the Fed may slow down its rate hikes, we've been talking about that now for a little bit. The Fed stopping rate hikes, that's going to come in 2023 at some point. Maybe the first meeting of 2023 or the second meeting in 2023. Either or, I believe now, either or. The first or second FOMC meeting of 2023, that's when the Fed will stop raising rates. The market will cheer. The market will think that that's a pivot, but that's not a pivot. Don't get confused on that. A pivot is when they are going one direction and then boom, they turn around and they're going the other. So they're raising rates, they pivot, and they start lowering rates. That's not what the Fed's going to do this time. So don't let pivot talks make you think that that's what's going to happen, because it's not gonna. Now, let's see, what else did they talk about here today? Okay, so what the Fed is planning, okay, what I just mentioned, I don't think any of that was surprising for us. Some in the market may have been surprised, and I think that's why, if we go look at the SPY here, I think that's why, and I'll take it to the 5-minute chart instead of the daily chart, that's why we had that dip midday, okay? If it wasn't for the FOMC minutes today, I don't think there would have been a dip. But let me go to the 5-minute chart here so you can see what I'm talking about. Let me just update it right quick. Right quick it is, because this new Livestream software is, I think, a little crisper and fast. Okay, on the screen, for the majority of it, a little bit on the left is still yesterday. You can see that spike in volume. That's where yesterday ends and today begins. So you can see we rallied in the morning, sold off right before lunch, was flat, real flat. But then right at 2 o'clock, we have a huge spike up, and then that's where we hold. We don't go any higher than that for the rest of the day, right here, okay? We hold, that's the high for the day. And that is right under this purple line here. This purple line is the weekly expected move, okay? Which is sitting at 403 for the SPY. 403 for the SPY. Now, it's interesting, too, that when the market sold off today, all right, where did it find support? It found support at the Fibonacci level. That level is at 399, okay? That's a good one, all right? It's the 61.8% Fibonacci level. That's where support was today, which was great. And then resistance just shy, just a few pennies shy of the weekly expected move. As a matter of fact, the high registered here today was 102.92, okay? That's literally a few pennies shy of the weekly expected move at 103. All right, let's go back to the daily for this. Now, the indices, they did settle the day. Let me fix this chart. They did settle the day with a nice gain, nearly right at their best levels of the entire session on light trading volume. Let me show you this. So let me open this chart up. I love how quick it is now with the live stream. Oh, I know I keep saying it, but it's just so much nicer. that it is responsive and real crisp too on the screen. Okay, so as I open it up, you can see the volume there on the bottom. Volume today, you can see that it has just been moving down for the past 2 weeks, as a matter of fact. But today on the SPY, we had 68 million. Oops, sorry. 68 million, where the average right now would be 86 million. So a big drop off in volume. Friday is going to be even lighter with volume. So things can move pretty rapidly when you've got light volume, because it doesn't take much. Now, right at the end here, we had a break of structure, and that's because we got higher than the high, which is right here, for last Tuesday, the 15th of November, okay? Last Tuesday, the 15th of November, that was the high before we started this flagging pattern here in the SPY. Breakout yesterday, continue the move today. And a break of structure means that we got above and we closed above that previous high. Okay, that's typically a bullish sign, but we're just pennies away from the upper end of the weekly expected move. We have a half of a trading day left, Friday morning till 1 p.m. Eastern, when the market closes for trading. Now, the 200-day moving average is at 105. All right. We have the downsloping trend line that has stopped every rally of 2022. It's just flat up been the no-go zone, the line you don't cross, in every rally. I imagine we tap it or we come very close to tapping it, and then we sell off. So building into a short position or waiting until we get closer to that point in time, I think is when you would like to short. Maybe you don't do it yet. Maybe you give Monday a chance to see how things progress on Monday. I think we have a good opportunity for Monday, when everyone's back in the office, to continue this rally and move up higher. But everyone's going to be watching this red line down here, or up here, I should say, to see if the market can break that. I think majority of people are going to say no, it can't. Okay, it's going to be a very critical point for the market. All right, let me clean this up here, and then we'll go to the queue. Now, just another reminder, the market is closed tomorrow, and the market opens normal on Friday, but it does close early on Friday, and it closes at 1 p.m. Eastern. Now, for the Qs, it's a little bit, the setup is a little bit different, okay? We did have the expansion, all right? We have, again, a bit of a flagging here. We break out today, but we didn't go past that Tuesday high, the 15th high. That's where the Qs need to go, which is right about here. And right above that is where the 50% retracement level is for the Qs. And that 50% retracement is 294. I think we get to that. I think the Qs can get to that next week. 294. 288 right now, which is a very sticky area. There's a lot of action on 288. But that 294, I think we can get there next week. And then do we go all the way to retesting this downsloping trend line that even for the Qs, just like the SPY, has been the line you don't cross, has stopped every rally in 2022. Then maybe we can short from there. Okay. All right. Let's go to the IWM next. And we'll take a look at that. And then that's all my notes for today. Not a whole lot. I know you guys want to get going and get your holidays started. All right, so let everything load here. I'm waiting for my lines. There we go. Okay, we talked about this and we've been talking about this. This downsloping blue trend line right here. This has been the line, okay, that has stopped every rally in 2022 for the IWM. IWM is your small caps. It broke above it one day. That was last Tuesday, the 15th. It hasn't broken back above that yet. Today, the wick did get above it, but it pulled back and closed right on it. Look at all these attempts. There's 1, 2, 3, 4, 5 attempts to break through this trend line have all failed for the IWM. I don't know if it's got it in it to even do it or not. To break above that. We'll have to see how this all works out, but if it does break out, we've got a Fibonacci line here, the 61.8%, which is right around the 186 area, all right, 186, 187. But if it doesn't break out, we're getting awfully close to the 50% Fibonacci, which is right here. There's been a lot of reactions there so far. And maybe we just end up wedging into that. Or if we keep a straight bottom with a downsloping top, that's a descending triangle. Where's that going to take us? Maybe we break down. If this continues to move sideways while the SPY, while the Qs continue to move up to tag their resistance zone, if the IWM keeps moving sideways, then maybe it breaks, right? And then the SPY, the Qs, the IWM all break from their trend line, okay? And just get demolished, just completely demolished. Okay, let me go. If you have questions, plug them in now. I'm going to look at the IWM and then we will wrap this up. I'm sorry, IWM. This is the Dow Jones, ticker DIA. All right. We had a bit of, oh, my Sharpie. Well, I don't need my Sharpie right now. I need to lower this down a little bit. Anyways. Okay, so if we look here, okay, the top of the summer rally, because the Dow's been the one that has just been rolling, all right? The top of the summer rally for ticker DIA, the Dow Jones, was 343. We closed at 341, almost 342. So 343, that is the top of the summer rally, okay? So next week, 343 will be a key area. Can the Dow do it? If the SPY and the Qs aren't quite at their trend line, and if the IWM moves sideways while the SPY and Qs move up to their trend line, what's the Dow going to do? Right? What's the Dow going to do? Because if Dow components are moving up, that's going to help the sectors in the S&P 500 in the SPY. So it's interesting because if the Dow, ticker DIA, closes above 143, then the Dow just made a higher high for the first time in 2022. Okay. Let me adjust this chart here real quick. And I'm just going to put 2022 on here. Okay. So you can see we've got the high right there. We have a lower high, and then we have a lower high. If the Dow breaks that third lower high and makes a higher high, then the narrative that we've turned things around is going to be very loud, very, very loud. But with the SPY, SPX, and the Qs not yet at their resistance downsloping trend line, and if the IWM just consolidates along its downsloping trend line but doesn't break through, then I don't think the Dow Jones, breaking above it, I don't think that that's enough to change the narrative that, hey, we've done it, we're making higher highs. I don't think it'll be enough. So we've got to watch how these other entities are going to play out when they get to that resistance. Okay, it is a critical zone, and it's a make or break for the market. Okay, because if the SPX, the SPY, if the Qs don't break their downsloping trend line, their 2022 downsloping trend line, and if the IWM just skirts along its downsloping trend line but doesn't get back above it, there's no way the Dow is going to keep moving while the rest of these products are selling off. Now, one more quick thing to point out here, all right? I want to clean this up here, and I'm going to go to the SPX. As a matter of fact, I'm going to go to, I'm going to open up a new chart here real quick. Open up a new chart. I want to show you this because this could be the setup, okay? The bigger setup that we have here. The Dow is ridiculous. The Dow has absolutely been ridiculous. Yes, it has. It has just been moving like a rocket. But it may have found its match here at this 343. It may not be able to do it. Okay, I want to go to the SPX. Now, look at 2022, okay? Let me get 2022 on the chart. The 2022 has been going down, right? The big grand scheme of things is we are in a bear market. We are in a downtrend. Now, there are some bullish setups taking place. There are short-term bullish setups that could be setting up for a bull trap. You know the trend line. I've pointed it out. We've talked about it many times. Now, what I want to do is I want to go back to 2018 for just a moment. There are, and as a matter of fact, I'm going to change this from I'm going to go to a monthly here real quick because I want to go to 2018. I guess I should have, my apologies for bouncing around here. I need to keep it on the daily. Okay, let's go to 2018. And there's a reason why, okay? In 2018, I'm just going to put 2018 on the chart here, okay? In 2018, we had inflation. The Fed was tightening, all right? So there was some similarities in 2018 to how now is acting, all right? I know it's a different time, it's a different setup. But in 2018, the Fed was hiking rates. not nearly at the pace that the Fed is hiking rates today. But typically, and before we dive into this, if we go to the market cycles, no, not wrong one. Sorry, I don't want that one. Seasonality pattern, right? In December, okay, November is typically a sideways moving, maybe a little down sloping on the seasonality chart. December is typically right here, the Santa Claus rally. The first 3 weeks or so of December, we rally. And it's a pretty significant rally. Now, 2018, all right, let's look at November and December, okay? Let me get my highlighter here. Okay, November started right, okay. November started right here. This is when November started, on this candle here. November ended on this candle right here, okay? Right there. Look at November. If I draw a line, I know it's not perfect, right across. For the month of November, you basically went sideways in 2018. But look at what happened in December. It was a bloody sell-off. The Fed was hiking rates at this particular time in history. Inflation was high in this particular time in history. Not as high as it is now. And the Fed didn't raise rates as quickly as they did now either. A third comparison is that during this time in history, the Fed was doing quantitative tightening, taking money out of the market, taking liquidity out of the market. The Fed is doing that right now at the tune of $95 billion every single month of liquidity coming out of the market. So what if, and you can see the end of November, let me clean this up a little. From November 23rd all the way to December the 3rd, and yes, there was a break. November 30th was a Friday, and December 3rd was a Monday. So we have our holiday break there, okay? And you can see that in 2018, even though this was happening, we had a green candle on that last Friday, all right? And that would have been a half day, okay? But then on that first Monday, we basically went nowhere, okay? And we had a doji star right there. You can see that. Hardly anybody on the candle whatsoever. Nothing. Nothing. But then from that day, we sold off all the way to December the 24th, Christmas Eve. Okay? So for the 3 weeks of December, we sold off, and hard and fast. And let me measure this move. I'm going to go from December 1st right here, and we're going to measure down to December 24th. And let me move that over so you can see that. Oh, okay. 16%. A 16% drop from the first trading day of December to December 24th, which was a Monday. And then when we came back, when Monday, December 24th, we came back, traded Wednesday, December 26th. It was a 5% jump in the market. Okay. And then we rallied for the rest of the year. Obviously, not that many trading days, just a few. This would have been the last trading day of December right there of 2018. So, is this our future for December of 2022? It's something we have to ask ourselves because there were a lot of similarities to what is happening now versus what happened then. Remember, the Fed was hiking rates. The Fed was pulling liquidity out of the market. Inflation was high, but none of that was as bad as what we have right now. Okay? We have higher inflation right now, and this is all data that you can look at. We have higher inflation now. The Fed is pulling more liquidity out of the market now than it did then. The Fed is raising rates at a faster rate now than it did then. But then it caused a 16% fall. What could the fall be now? Things are worse. We're going into a slowing economy. We're going into a deep recession. Those things are on the horizon. Those things are what we're doing now. And if you compare this, right, what are we doing right now? We are reaching resistance. Now look at the rest of 2018. This is one thing that you also have to take into account, okay? 2018, basically, if we go to the first trading day of 2018, it was right here, okay? So from that point, and we go all the way to, well, October of 2018, we were down here. So we were at a loss on the year, but not nearly as bad as we are now, because there was a sustained rally from being negative on the year going down to being positive on the year. And then you take into these two falls, the October fall, the sideways November, and the December fall, and that's pretty substantial. But the recovery was literally right around the corner. Look at that recovery. It only took, well, let's see here. It took until April the 22nd of 2019 to get back to the high seen right here. And then a couple days and overtook that high, had a pullback from then, but still started to march higher. So it didn't take long to turn around. Here in 2019, they were not facing a recession. You know, the recession didn't happen in 2019. It did in 2020, right? It was a very short and quick recession in 2020, but it did occur. Because, I mean, just look at that drop in March of 2020. But what I'm trying to say here with pointing out the 2018 possibility is that when the market fell, the Fed was doing what it's doing right now. but we were not facing earnings growth recession. We were not facing a recession. We were not facing what the Fed is doing to the magnitude the Fed is doing right now, but we still had a December sell-off. And let me just go back real quick, okay, to the SPX over here where we've got all of our lines drawn. We are getting awfully dangerously close, I would say, to our down sloping right here, catching all the highs. We are getting dangerously close to that trend line. I say we are a week or less away. And if we hit that trend line and we sell off like we did the other times of the year, then we could have a repeat of 2018 where the first 3 weeks of December, instead of having a Santa Claus rally, we get a bloodbath. We sell off. It's a probability, and it's something to study if you like to do any type of deep dives on history, okay? So the main reasons for 2018, this, are the Fed. The Fed is not your friend. The Fed wasn't the market's friend back then either. Not until that bottom. All right. Well, I just wanted to point that out, not to be doom or gloom, but just to say that we are getting dangerously close to a very critical level in the market. A week or less, and we are at that particular moment. It doesn't have to play out like when we look at the seasonality pattern, okay? This chart, the red line, has been pretty spot on all year. And it says seasonality and the pattern is a rally in the first 3 weeks of December. But if we get rejected at that trend line and this becomes a bull trap, we could end up with a 2018 type of scenario where December is not very merry. So just keep that in the back of your mind, okay? I don't want to be doom and gloom. I just want to point out the what if we do hit this trend line, because you can see for 2022, that has been the trend line. And we're getting awfully close to it. Okay, let's see here. First up, I've been waiting for the big turnaround. Wonder if we break the trend. Wonder if we hit the bottom already. It's possible we have hit the bottom of 2022. That is possible, okay? But the probability of breaking through this trend line, I think, are pretty slim. I don't think going through this trend line, I just don't think it's going to be, I don't see it happening. I don't see it happening. I mean, I guess there's a small probability, but I do not see it happening. Now, with the seasonality chart saying rally, what if the seasonality chart here, just like the end of October and the low, where this appears to be towards like the 4th week of October, but in actuality, we saw this October low in the middle in the 2nd week of October instead of the 4th. So what if the first 2 weeks of December we pull back and we pull back into an area of support? Maybe the 50% retracement area. That would be a possibility. Around the 3,900 zone, where we found a lot of support there before, right? All through here. There was support before resistance. There was support and resistance. Support, a whole bunch of resistance, and support. There's a lot of action at the 3,900 zone. So what if we pull back there and then we rally? I don't know. Nobody can see that far ahead a couple weeks from now, but what if we do get rejected at that trend line? We pull back in the first 2 weeks of December, the last 2 weeks of December, we do rally. And then when we get to earnings season in January, what if those Q4 earnings are negative? Then we sell off even more. Then we hit a recession, we sell off even more. And then in 2023, that's when we will actually undercut the low of 2022. Just some probabilities here that I'm putting forth and I'm starting to think about. It's almost December, starting to think about, well, what's going to happen? Are we going to get the Santa Claus rally? Is it going to be delayed this year? What's going to happen in the first part of 2023? Things that I'm starting to think about now so that I'm prepared for them when they occur. But I'll just leave you with this. And let me. What caused the 16% drop? The Fed. The Fed did. A surprise 75 basis point rate hike. That would do it. I don't think we're going to get. It doesn't seem like we're going to get a 75 basis point rate hike. It seems like we're going to get a 50. After reading the Fed minutes, that's what it seems like. But we're not out of it yet. We're not out of the realm of possibility that it could be a 75 basis point rate hike. As a matter of fact, if we go to the CME Fed Watch tool, I don't think the Fed minutes today changed anything, but we can take a quick look at this and just see if the Fed minutes changed anything, but I don't think it did. No, it didn't. We're still at a 75.8% probability of a 50 basis point rate hike and a 24.2% probability of a 75 basis point probability. So it seems like everything is sitting right now on that 50 basis point rate hike. The reports that came out today still kind of suggest that as well. If labor, when that report came out today, if labor was still strong and was still holding up, then yeah, maybe we do shift towards the 75, but I don't think we get to that just yet. I kind of think the days of the 75 are over with for now, but I could be wrong. We could always, the Fed can surprise us, just like you said, a surprise 75. Okay, well, that's everything that I wanted to talk about today. If you have any other questions, plug them in. We can talk about them. Otherwise, we'll wrap it up here. And if you could do me a favor and click the like button, share this video with a friend. And if you like the perspective, click the first link in the description. And have a wonderful Thanksgiving Day. And if you are off on Friday and have a long weekend, enjoy it, have fun. I will have a live stream on Friday. I don't know if I'm going to do it early or if I'm going to keep it the same time and just do it in the evening like we normally do. Most likely probably keep it around the same time-ish. And not do it early, just to keep it consistent. That's what I'll probably do. But I will have a live stream on Friday, and then of course be back on Monday with another live stream. Let's see here. SPY 403.07, 408 will be top. Let me dive in on it a little bit closer here. Okay, I'm not even on the SPY. I'm always used to the SPX when talking about it. SPY, yeah, 403 high and buy, 408 will be top. That's what I'm thinking. Yes, I do think the SPY can get above the 403. Right now, the 200-day moving average is at 405, and the downsloping trend line that has been the top of every rally in 2022 is at about 408 right now. As we move forward in time, like if for some reason the SPY stalls, okay, and it moves sideways along its 200-day, then as we go forward in time, this downsloping trend line will continue downsloping, and that 408 could be lowered if we move sideways. But as it stands right now, the SPY should be able to break 403 without much problem, and 405 to 408 breaks applied. That's the top. Okay. So if you are running this, once we get to that 200-day and we get to 105, start taking your profit off the table. And what I am doing, and you don't have to, but I will be opening that short position. Okay. And then if we do break the 200, get above 405, 408 right now is that downtrend. That's when the profit would be taken off the table completely. If not so, somewhere between the 405 and 408 and apply to short positions. Because I do think we drop from that trend line. I think it'll be a bull trap. But you always have to be prepared for the possibility that if things open really strong next Monday and Tuesday, people are in the holiday spirit and they want to see a rally, then the FOMO will be real. Okay? The FOMO will be real. and it could potentially push it above that 408, potentially, just as a possible another scenario because of the FOMO effect. But it doesn't get much higher than that because there's right here at 414, there is stiff resistance right there. So if FOMO broke that downsloping trend line, it would be the first time in all of 2022 that that trend line would be, momentum would push it through. Then I think it's opening up for a bigger bull trap, and it's going to trap all the FOMO chasers in and get them to hand their money over to those who started that short position and worked for it. But you always have to be prepared for the dynamics of the market, how the market moves. But that's what it looks like from right now. That trend line to me just seems too strong at this moment in time. Okay. And those are the numbers. So yes. Awesome. You have a great Thanksgiving too. Thank you for your hard work. You're out there making the trades and learning. So you're doing great too. It is a crazy market for sure. It absolutely is. But we're doing it. We're managing it here every day. You have a wonderful Thanksgiving too, and you are very appreciated. You are all very appreciated. Just trying to get everyone up there, get all the comments up. Okay. Well, I'll wrap it up for tonight. Have a wonderful Thanksgiving. I will be doing a live stream on Friday, so I'll see you then. And then be back on Monday on a normal schedule because market will be open all next week. Won't be a short week or anything like that. So have fun, enjoy your Thanksgiving with your friends and family, and have a wonderful extended weekend if that's what you're doing. Or if you're working, make it fun, make it good, make it count. Okay, thank you guys so very much for watching, and I'll see you in the next video. Happy Thanksgiving.